Imagine running a country where most of the money that powers the economy comes from a single source. If that source grows stronger, the economy feels stable. But if that source weakens, everything from government spending to the cost of food can start to shake. This is the reality of Iran's economy. For decades, oil has been the financial backbone of the country, shaping everything from government budgets to international trade. Understanding why Iran depends so heavily on oil helps explain many of the financial challenges and economic decisions the country faces today. Iran is one of the most resource-rich countries in the world when it comes to energy. Beneath its land lie enormous oil reserves, making it one of the top oil-holding nations globally. These reserves have given Iran a powerful economic advantage for decades. Oil became the fastest and most reliable way for the country to earn money from international markets. Instead of relying on multiple industries to generate income, Iran's economy gradually evolved around exporting energy. Over time, oil transformed from just a natural resource into the central engine that drives the nation's finances. The importance of oil begins with government revenue. Governments need money to function. They need to pay public workers, build infrastructure, support healthcare systems, maintain transportation networks, and fund national development projects. In Iran, a large portion of this funding comes directly from oil exports. When oil prices are strong and exports are flowing smoothly, government revenue rises quickly. This allows the government to spend more on public programs and economic projects. However, when oil exports decline or prices fall, the opposite happens. Government income shrinks and the financial pressure spreads across the economy. Oil is also essential because it brings in foreign currency. Every country needs foreign currency to participate in global trade. Nations must pay for imports such as machinery, technology, medical equipment, and many consumer goods. Iran earns much of its foreign currency by selling oil to other countries. Those oil sales bring in dollars and other international currencies that help stabilize the economy. Without that steady inflow of foreign currency, it becomes far more difficult for a country to buy goods from international markets or maintain the strength of its national currency. Another reason oil dominates Iran's financial structure is historical development. During the 20th century, Iran's oil industry expanded rapidly. As oil exports increased, they became the fastest way to generate national wealth. Governments relied heavily on this income because it was easier to export oil than to build entirely new industries from scratch. Over time, the economic structure became more dependent on oil revenue. Manufacturing, technology, and service sectors did grow, but they never reached the same level of influence as the oil sector. This type of economic structure is often called resource dependency. When a country has a valuable natural resource, it may rely on that resource for a large share of its income. While this can generate wealth quickly, it can also create long-term risks. If the economy depends too much on one industry, any disruption to that industry can create widespread financial problems. In Iran's case, those disruptions often come from global oil price changes or geopolitical pressures. Sanctions have played a significant role in shaping Iran's economic dependency on oil. Over the years, international sanctions have restricted the country's ability to trade freely with global markets. These restrictions have targeted banking systems, international transactions, and energy exports. When sanctions become stricter, Iran's oil exports can decline sharply. Because oil revenue represents such a large share of national income, these restrictions can place enormous pressure on the economy. Government budgets tighten, foreign currency reserves decline, and the national currency may weaken. Oil prices themselves also influence the strength of Iran's economy. Global oil markets can change quickly depending on supply, demand, and geopolitical tensions. When oil prices rise, countries that export oil benefit from increased income. For Iran, higher oil prices mean larger government budgets and improved financial stability. But when oil prices fall, revenue declines quickly. This creates a cycle where economic growth becomes closely tied to the volatility of global energy markets. The transportation of oil also adds another layer of financial importance. Much of the world's oil passes through critical shipping routes in the Middle East. Iran's position in this region places it near one of the most important oil transit points on the planet. Any tension or disruption in this area can affect energy markets worldwide. Because Iran's economy depends heavily on oil exports, geopolitical events in the region can directly influence the country's financial health. Another factor that strengthens Iran's reliance on oil is limited access to international capital markets. Many countries can raise money by borrowing from global investors through bonds or attracting foreign investment. Iran has fewer opportunities to do this because of financial restrictions and geopolitical tensions. This makes oil revenue even more important as a source of funding for government spending and economic stability. For ordinary citizens, the effects of oil dependency are visible in everyday life. When oil revenue declines, governments may face difficult choices about spending. Public projects may slow down, inflation may increase, and the cost of imported goods can rise. This can reduce purchasing power and affect economic confidence across the country. In contrast, when oil revenue increases, governments have more flexibility to support the economy and fund development programs. Iran has recognized the risks of relying too heavily on oil. In recent years, there have been efforts to diversify the economy. The government has promoted sectors like agriculture, manufacturing, petrochemicals, and domestic industries. These sectors can generate additional income and reduce dependence on raw oil exports. However, diversification is a long process. Building strong alternative industries requires investment, infrastructure, and stable economic conditions. Petrochemicals have become one of the areas where Iran is trying to expand beyond simple oil exports. Instead of exporting only crude oil, petrochemical industries process oil and gas into higher value products, such as plastics and industrial chemicals. These products can generate additional income and create jobs within the country. Expanding these industries helps Iran capture more value from its natural resources while gradually building a more diversified economy. Despite these efforts, oil remains deeply connected to Iran's financial system. Energy exports continue to provide a major share of foreign currency and government income. Global oil markets, sanctions, and geopolitical developments still play a large role in shaping the country's economic outlook. This means that fluctuations in oil prices or export levels can quickly influence economic stability. Understanding Iran's dependence on oil reveals an important lesson about global economics. Natural resources can bring wealth and opportunity, but relying too heavily on a single resource can create vulnerability. When global markets change or political conditions shift, resource-dependent economies can face rapid financial pressure. Iran's economic story, therefore, is closely linked to the story of energy markets. Oil has fueled development, funded government programs, and connected the country to global trade. At the same time, it has created challenges that require long-term economic reform and diversification. Today, Iran continues to navigate this balance. Oil remains the core financial engine of the economy, but the country is gradually exploring ways to expand other industries and reduce its dependence on a single resource. Whether those efforts succeed will shape the future of Iran's financial stability and economic resilience. In the end, the reason Iran depends so heavily on oil is simple. It provides the majority of export income, supplies foreign currency needed for global trade, and funds a significant portion of government spending. For decades, oil has been the fastest and most powerful economic driver available to the country. But as global energy markets evolve and economic pressures continue, the challenge for Iran will be finding ways to build a more balanced and diversified economy while still relying on the resource that has shaped its financial history.